Okay, traders, welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, February 23rd. Michael Boutros here with you this morning. So we did get the release just now of U.S. weekly jobless claims. Not a major market mover at this point. Coming in right around expectations, no major shifter there. Slightly higher on the initial claims here. But in any event, you are seeing the dollar a little bit of a drag today. Relative performance versus the greenback heading into the U.S. session looks like this. You can see that the dollar is actually weaker against all its major counterparts. Euro being the weakest performer, oddly enough, up just 0.15%. Kiwi with the strongest rally, up 0.58. So we'll be taking a look at that. We did break that resistance level that we were looking at yesterday. That puts us on target for the next key level just higher from where we're trading right now. So we'll go over Kiwi. On the list for today is dollar yen, dollar CAD, sterling dollar, euro pound, and euro dollar. Obviously, we take a moment and look at the commodities if need be. But as always, guys, feel free to throw out any questions or trade setups you'd like to review. Quick reminder, housekeeping here, guys. I will be out next week. I'll be moving, so I have a lot of balls in the air. I don't think we'll have time for any webinars. So if you have any questions or trade setups, like I said, that you want to discuss a little bit ahead of time, we'll leave the extended session here today for questions. All right. Graham, good morning to you. Great to see you in the room. Kazaa, Mark, Pete, Kamal, Gary. Okay, Carlos is here as well. Doug, good to see you guys in the room. So let's jump right in. Again, a quick update as you continue to see all this interest rate talk go back and forth to this. We looked at it yesterday. Just wanted to bring it up today because it wasn't a one-day phenomena. Indeed, you do still see the May interest rate expectation holding above 60%, which is not necessarily being reflected in price, but definitely an interesting dynamic we'll continue to track here as far as what the markets, Fed Fund futures, are saying for interest rates moving forward. Looking at the dollar index, here's what it looks like today. So we'll start off with the daily chart. You know, it's pretty basic. I don't really have much to go over here, guys. The same resistance target that we were talking about earlier in the week, while it did get invalidated on an intraday basis, you couldn't get a close above it, and we've been pulling off ever since. So I do still think dollar index has a little bit more downside to go before we start to resume the broader uptrend. On the near-term charts, here's what it looks like. And in fact, as far as the intraday charts are concerned, here was the chart a few days ago. Okay, and there was that resistance region. We popped right through yesterday, and we talked about this in the webinar. I said, look, if we hold above this instant support at 101.50, where it was former resistance, then yeah, you'd be looking for continuation to 102. But we noted in the webinar the strength of the divergent signal that we saw yesterday heading into the U.S. Open. And again, once we cleared back below 101.50, the risk really became right back to the downside again. So where do we go from here is the question. We're right back at support, or just above. 101 is what I've been looking at, a major fib confluence, but also that parallel there, which has offered some pretty nice pivots in price. The weekly open comes in just lower, 100.91. So either way you slice it, I'd be looking for some near-term support here in the index. The broader thing still remains constructive while within this ascending pattern, but certainly the risk near-term is for a dump a little bit lower in my estimation. If we take a quick extension, we actually have made, or we're approaching, the 100, which comes in even lower, 100.90. So maybe a dribble lower, guys, into the U.S. Open towards this region to complete a simple correction. Either way you slice it, the immediate risk is for a little bit of a dribble lower here as we head into the U.S. Open. If you're holding short dollar exposure, heading into 100, 101, 100.90, I'd start to take something off. Definitely have your stops break even or better at that point. If we spill below 101.80, this is just a soft target here at 1.72. I'd be looking for confluence support down here. Okay, and this is broader bullish invalidation. A spill below 100.55, I think, would spell a much, much steeper correction here for the index. That would be a break below this region. And keep in mind what's also there, that 100-day moving average is not too far either. So things getting a little fishy here for the index. You know, we've had quite a rally since the start of the month. Again, just missing key resistance again at 101.80 before the turn here, but immediate risk still remains weighted to the downside for the index. Any questions on the dollar? As far as the minutes were concerned yesterday, guys, we really didn't get anything new. It pretty much was a good reflection of what we had heard from Yellen the previous week in the Humphrey Hawkins testimony. So I don't think there's anything necessarily new to take away from that. Okay, bear with me one moment. Oh, the only thing I did want to bring up, I knew there was something in my mind that I wanted to talk about. As far as yesterday's release, the interesting thing is that the FOMC will now be adding further economic projections with their quarterly meetings. So as opposed to just the dot plots, this was the real development, I guess I should say, is not necessarily any change in policy, but the way that policy is disseminated, and that they want to be, quote unquote, more transparent. The way I see it, they want to put more variables on the table to give themselves more flexibility with regards to movements in policy. So they're going to be adding new summary of economic projections that are called fan charts. They're not the easiest to read. They're definitely not as easy as the dot plot, but it'll give the markets, quote unquote, more transparency, as they say, which is a bunch of malarkey. But in any event, David talking about sterling and yen. Yes, we will get into both of those. Let's go into dollar yen next, if you don't mind. Any questions on dollar index? Going once, going twice. Looking a little bit lower. You could see some support at the median line here. So if we do get a bounce, again, near-term resistance 101.17, 101.24 still has you on course for a drop into these key levels. Before we go in dollar yen, I just want to go in order here, David, real quick. Kiwi looks like this. And last night we looked like this. Okay. So the major play for Kiwi yesterday was the fact that we were basically in this consolidation. There was a downside formation that had us at resistance. And remember, the broader bias for us still remains weighted to the downside for Kiwi. The question was this rebound off of key confluence longer-term moving averages, is this going to charge a bit more of a rally into structural resistance, or was this just going to be a blip and a breakdown? Well, we had it at resistance last night. I was talking to you about that in the webinar or in the report. We plowed right through. Keeps the focus higher. I'm looking for exhaustion, short entries near 72.50 if we can get up into that region. You have structural basic resistance trend line off the highs from last year. You have the current operative median line for the ascent off of this year's, the November-December lows. And both of those coincide on the 50% retracement of the decline off the highs. So a very nice sweet spot, a pocket, if we do get up into there, I think would get a nice opportunity to try to press some shorts. Here's what it looks like on the intraday. And here's what it looked like last night. Okay, we were sitting at resistance at 7,200. What is 7,200? Well, it was basic median line resistance, the upper median line parallel of this formation we've been in for 3 weeks. Really clean. It was the weekly open and the weekly opening range high. Gave you 71.93 into 72. This is a 127.2 extension, guys. You might not be familiar with this or see it used too many times. I've actually used this many, many times before, and it's been an extension that has been extremely fruitful. If you're not familiar with it, it's just another derivation of the golden ratio. 127.2 is actually the square root of the 1,618 extension. Whereas 786 is the square root of 618. 127.2 is the square root of 1,618. So in any event, a lot of times you can find these catch some really nice corrections and rallies. Long story short, you did get a kickback off that from 72 all the way down into 71.70. This break really invalidates this structure. Okay, so I do think the risk is for a climb higher. 72.23 has already been taken out. And then 72.52 is where that confluence region of all those trend lines converge. Let me slap these lines for you. okay, right up here. So if we do get a stretch into that, again, I'll be on the lookout for possible short entries in Kiwi, looking for a little bit more of a rigid resistance into that region. We've been following this trade pretty well. The last time we covered Kiwi was back on the 15th, and that's as we were coming into resistance. In fact, we came right into this resistance level. We slammed all the way back into the lows. That's this. So now that we're breaking this formation that we've been reacting to for the last 2 weeks, you got to give this some room and let the, respect the upside near term for a little bit more of a recovery. Any questions on Kiwi? Here's the 60-minute. Hey, Sarub, good to see you in the room, sir. Which index are you talking about, David? We will be if you want to, Sarub. You want to look at gold? We'll definitely look at gold. It's breaking the highs. We'll definitely take a look at it. I think a lot of the metals that you're seeing and a lot of the energy moves that you're seeing today are largely attributed to dramatic dollar weakness across the board. All dollar-denominated assets pretty much are starting to become a little bit more afloat. And the fact they were rallying with the dollar, when you start to see the dollar subside, it's not too surprising that they see them hold a little bit more of a move higher. The U.S. dribble lower will help multiple setups. Absolutely, David. I'm with you on that. At least to get us to areas that we want to get into, right? I'm with you on that. The puzzle pieces work pretty well here. Okay, so that's Kiwi dollar. I'm going to keep moving here so we can get through all your questions. So we breached through 72. Look for that rally towards 72.60, area of interest for short exposure and exhaustion. That's number 2. Number 3, dollar yen. Here's what the yen ski looks like. So our suspicion that this thing will make another low first, I think, was well suited yesterday, and I think that's basically what we're on the move for now. Here's dollar yen yesterday. So you have a very clean weekly opening range taking shape just above the monthly and weekly opens, confluence with the 618 retracement. Now, just below that, you have structural support. Just below that, you have a key confluence Fibonacci region of 112.33 to 112.39. As I noted yesterday, that's really the level of which I'd like to stay constructive above. As long as we stay above that key support region, if we get a dip into this, I will be looking for some exhaustion. Look, the broader trade for dollar yen, guys, and you know my feelings about dollar yen, just a disclaimer to everyone here in the room, anytime I touch this thing, it's always with a good deal of healthy caution and respect. This is one of the main premises of why, we're looking for what we're looking for in the dollar yen. This is a weekly chart of dollar yen, again, going back to the lows that we made in 1995, the highs that we made in 2002, subsequent lows that we made in 2011. This same slope has been calling the turns in dollar yen for the last 5 years. Okay, this is a parallel, caught the lows, caught the lows. This is a parallel, caught the highs, support, break, resistance, now support. Okay, also where we rebounded off of earlier this year was just a swing high from May of last year. Just below that until 111, you have a 38.2 retracement. Let me fix that. Okay, long story short, we came off a big region of support. As long as we hold above this on a weekly close basis, the risk is still for the rebound to stretch higher. The question we're trying to ascertain, is this rebound just a blip, or is this going to be a little bit more of a solid recovery to give us one last high within the confines of this? Would be a 1, 2, 3 extended, 4, 5. Would be a nice healthy wave count. That being said, the impetus is on this key support zone. So with that broad picture in mind, you go back to the daily chart. Okay, here's the structure we've been looking at from just the lows off last year. Here's structural support, the monthly open, coming in some support right here. There's that 11 region, 111, 38.2, the swing highs. Look what's in there, 200-day moving average, or excuse me, the 100-day moving average, former slope resistance. So Broader bullish invalidation right now for the scalp, for the intraday, I'm looking for this thing to start hover and hold near 112.30. Here's what the hourly chart looks like. Okay, it just so happens that 112.33 would correct and complete a 618 extension from the decline off the high. It's also the 764 off the low. Nice confluence region there. Last ditch effort for the near term shift higher. If this breaks, it's going to go down to 111.40, if not the 111 handle. And again, that's where I would look to reassess, whether that long bias will in fact still be viable. But as it stands right now, I'm looking for support into one of these regions. We'll look for a turn in momentum. We'll look for this thing to find some sort of shift here if we are in fact going to hold higher. Mike, dollar yen appreciated the 5-year analysis. Oh yeah, you're more than welcome. However, the question I'm trying to answer for the next 5 minutes, should I close out a short or hope, it's breaking the weekly range? You're in the short? Okay, let's take a 5-minute chart. That's what I'm here for, buddy. Yeah, so you're seeing right off the bat, I'm just looking at this real quick, you're seeing right off the bat some near-term divergence on the 5, the 1-minute chart also showing you some divergence as price action continues to make those lows. So here's what I would tell you. I don't know where you're in from here, Graham, but I would definitely have shaved off a little bit off, stops at break-even or better. If the rebound into the U.S. Open takes you back northbound of 113, you're probably going to see a full-on recovery. I do think you see a dribble lower. That's just my humble opinion. But I can tell you that price action in the now, just taking into account the considerations on the 5 and the 1 minute, it does look like you could see a little bit more of a pop higher near term. Make sense? He says, thanks, I agree. Yeah, you got it. Feel free to throw out those questions anytime throughout the session, guys. Long-term bullish invalidation, Doug, I'm with you 100%. That's exactly the region I noted, 111 into 111.40. Yeah, this is my, if this is make it or break it, if dollar yen gets below that, sayonara, you could see 108. Is that my base case scenario? Not necessarily, but those are the implications for a move sub 111. And especially if you look at it on the daily chart, there's nothing. There's nothing in that range. So absolutely, I would have that as my key threshold, Doug. Make sense? Okay, next up on tap, dollar yen looking a little bit lower. See if we can't get some support for a pop higher. Moving up on tap is dollar CAD, and another one that is continuing to pan out pretty darn well. I'm looking for support near 131.09 was where I said would be the sweet spot. This is our bullish invalidation level, so it looks like we're going to make a run back on the weekly open. Here's what this thing looked like last night, and as I said. So we hit 132.09 on the button, so what now? I'm still inclined to look down to 131.33 or even 131.09 to press another long. So we're at 131.09 right now, okay? Bearish invalidation, still 130.74. I'll show you that in the intraday chart in a moment. And as long as we stay above that, I am looking for a long trigger off that region. The one thing I wanted to highlight with dollar CAD, guys, is that it's a very simple monthly opening range still. Not a damn thing has changed. Here's your monthly open. You set a low. You make a high at resistance. You fail at the low. You fail at the high. You've got a basic range. Respect it. Within the confines of that range, there is this formation that we've been working with for the last couple of days. Okay, you've seen this chart a couple of times on the reports. Here's where we were yesterday. Again, you saw some exhaustion there. Momentum had some divergence on those last highs. Really strong reaction off the 32.09 target. And again, the break below 31.32, there's 31.09. And again, next downside, I'd be looking right here, 30.85. 30.74 is what I have as the bearish invalidation, but near term, look for support there. And we'll call this terminal right now. If we break below that, I do not want to be anywhere near the long side of this trade. But those are certainly the near-term implication targets I'm looking for as far as exhaustion. Same themes we talked about early in the week, guys. Don't fall in love with any one direction. Okay, the markets right now are still in reactionary mode to all these comments. I don't know if you guys saw some comments from Steve Mnuchin, who was on CNBC this morning, the new Treasury Secretary here in the United States. The markets are going to continue to react to these things day in and day out. So we're going to respect the technicals. That's what guides our trades. And that's what's going to dictate our actions. Any questions on dollar CAD? Okay, do have some commentary coming out from Lockhart saying data have been pretty supportive recently. 2 or 3 Fed rate hikes likely this year. Not a mistake for regulatory pendulum to swing back. Okay. Lockhart loves making the news. Fate of the CFPB is somewhat uncertain at this time. Some regional banks may see regulatory burden relief. Sees regulatory reform focus on risk-based supervision. All right, these are all just fluff commentary coming out from Lockhart. I'll keep you updated if anything else hits the wires, but let's go ahead and move forward. I'm just eyeing this dollar CAD move here into support. I do want to see how we react into this level. Let me see if I can just bring this chart up here. We'll leave this on the side. All right, moving right along. Dollar CAD, that was number 4. Sterling, number 5. Here's what sterling looks like. So we're at resistance, okay? Bearish invalidation level, we dropped that down to 125 yesterday. We're testing that right now. If you guys remember, for the pound, the week started with us saying look for a dribble higher to sell. We got that dribble higher on Tuesday, made a nice sell just into the weekly open support. Tried to break the weekly opening range yesterday, but failed at 2,500. We dropped that 125 we dropped our bearish invalidation to 125. We're still holding the weekly range. We're still below 25. If this pops, our broader bias has been bullish pound, right? We were looking for this breakdown to give us a new low to buy. If we do break out, specifically 125.24, I think you're looking at a run back towards the monthly open again. That would be 125.60 into 125.78. 125.70 into 125.78. So coming in some resistance here. If you're not already holding long exposure, guys, I don't have anything here as far as trying to play the breakout. This would be a pure chase to get long pound here. So unfortunately, if you didn't take anything in overnight trade on pound on the long side, not interested. Trying to short it is a different deal. Ideally, guys, if we weren't seeing such overwhelming dollar losses, I would be very much interested in trying to fight this here. But I just don't think that you want to get in front of this. And if you look at the trade on all different time frames, you're in overbought condition in pound, you're in oversold condition in dollar CAD, and that's not when you want to really try to fight it, right? We want to wait for that turn, that zoom in retest to try to get back into the position. But that being said, sterling's at resistance right here. Ideally, all things held constant, you see a hold here for another move back into the lows. All right, questions on sterling? Okay. Back at resistance, British pound. Watch that 125 handle. Euro pound, number 6. Here's what Euro pound looks like on the daily chart. Nothing really new here. I just wanted to highlight that the levels have been super duper clean. Nothing's changed. So if we go to the previous update from the 21st, here's what Euro pound looked like. Those intraday targets have continued to play out really well. We talked about this yesterday. We bounced right into that key support zone, broke through this resistance, and now we're playing ping pong right here. The ranges are very, very clean. Play them as they come. Grandpa trade has been slow but steady. So if you're looking for something a little less volatility, but it has been pretty clean, Euro pound, still one of my favorite trades here. So no change to any of those levels, and invalidation levels remain steady there too. Euro dollars number 7, a quick review there as well. This is a little different. I know we're holding longs on the swing side of things. If we breach here, which it looks like we're doing, look for the the weekly open. Initial target would be 106.05. One thing I do want to note, there's been a lot of talk about this Euro rally for some reason. People are freaking out. I don't understand why. But just this morning on Twitter, I was just going through, and sometimes that Twitter handle is just more noise than it is help. So look, here's the relative performance. I showed you this earlier. It's the smallest gainer on the day. So I don't know, what all the fuss is about. That being said, you're coming into resistance right here at 105.80 initially. Weekly open comes in at 106.06. Okay. Not really wanting to get too aggressive on a full-on reversal trade or anything, but definitely an area of interest would be that weekly open. If you take a look here at the daily chart, former trendline support, I know it's been compromised a couple of different times this year, but that converges on that 50 line right about that 106 level, 106.09. The weekly open comes in at 106.06. So that would be the top side target for any advance here on the euro as we open up the US trade session. Also, I just want to see what this extension looks like. Gives you 106.17 on a stretch here. That's euro dollar. Number 7. Any questions? Coming in some immediate resistance here within the next 20 pips or so. If you're holding longs, watch these levels. If you're looking for new positioning, I'd actually be interested in a short positioning if we can get up here for a short scalp to the downside. Nothing too heavy. But remember, calling these rallies, especially on the whipsaw, a lot of long tails yesterday, guys. A lot of long tails. Whether it's euro dollar, whether it's Kiwi dollar, right? A lot of long, wicked sort of moves off support yesterday. So just be careful with that. Okay, oil coming right up, Conwall. Here's what crude looks like. I don't really like the near-term targets. I've talked about this trade for a while. Remember the levels we were talking about just before, Conwall, the webinar. There's 54.70. Okay, you just hit it right now. So if you were holding that long, I don't know if you took anything off there, but that's being hit right now. 55 is the only thing I have left. And that's the 618 extension off the lows, which caught the exact high that we made back on the 21st. And again, the longer term weekly implications for where crude is trading has me really reluctant to hold long exposure through 55. If we clear 55, cheers, man. You're probably going to see this thing go right to 59.90. But as it stands right now, you're at resistance. You're testing resistance. You're 30 cents off major key critical resistance at that 618 extension. Conwall, does that help? Again, the near-term structure, it's, you're not going to get much out of this. I'm just looking at the daily charts and the weekly charts for commodities at this point. It's just been too much chop, and there's not really much structural clarity. And I was trying to play with this earlier. There's just not much to get excited about. There's just no symmetry to the advance. There's not my cup of tea. Look at 55, okay? If we plow through 55, a soft target on the intraday, just 100% extension of this near-term advance gives you 55.56. And then again, you're basically looking at that 56 handle to the upside, 56.50, as just a soft target. Support, Conwall, still 54.29, 54.30, okay? This region here. We've been pivoting off it for a while. And it was this whole key region here of resistance at the beginning of the year. So that's still the level of support. And if we get back below that, Conwall, I do think you kind of want to dump on the long side. But that's certainly the key threshold near term. And that was what we talked about early in the week, guys. As we were probing here, even on this day, I actually put out a report on Daily FX. I linked it on SB Squawk. You know, if we didn't close above 54.30, watch for the pullback. Guess what? We didn't, and we got the pullback. Same deal today. Same deal today. If this rallies into 55 and we close back below 54.30, I would again count that as a false break scenario. Remember, we've made 1, 2, 3 attempts now to break above this key threshold every time we've closed below. So until we get a daily close above this, I'm weary. Okay, I'm weary of getting too comfortable trying to get cute on the long side of this trade at resistance. So quick look at that. That is crude number 8. Here's gold, number 9. Gold also making a breakthrough resistance. And we're already at the next resistance target. This thing just makes the break and you're there before the batten of an eye. So look, that's 1248. We didn't quite hit it just yet. The highs so far for the session. Oh, we did. 1248.64, 1248.77, just a couple of cents. This is a basic 50% retracement from the entire decline off the 2016 highs. Basic fib. Also, if you take basic trendline support, extrapolate that parallel off the lows from January, break, now is resistance. I don't know, but I do know that 1250, 1249 here, or excuse me, 1249, 1248 here, you want to look for some near-term resistance in gold. Next topside target with a breach there, you're looking at the 100-day moving average. Then the big levels, 1277, 1278. I don't think we make it quite there just yet. Note, guys, that even with this high, and these are the classic, the market will suck you in, you get all excited, just as everyone gets convinced that this is a breakout. I think this could be one of those fake outs. Even on this subsequent third peaked rally, you're still getting divergence, right? No extreme in the oscillator for those highs between January and early February, and even on this subsequent third high, now you have a third low in the momentum oscillator. So guys, I don't want to be the one trying to just, keep you out of the long side as this thing rally because, your trend is your friend. I get it. But for us as near-term traders, right, the reluctance for me is to try to encourage you guys to try to chase this rally any further from here, okay? I'm just very, very weary. It could go into this region. If it plows through and we close above, great, but there's nothing here that's screaming at me, yeah, we want to get involved on the long side still. And again, gold on the weekly chart, still at resistance. Okay, so the commodities have me in a really, my hands are tied. I really can't do anything. My hands are completely tied in commodities. And for those of you, by the way, just as a side note, for those of you who have accounts with FXCM who are getting transferred to Gain Capital, I believe you can trade gold and silver with Gain Capital. So that'll open that up for you as well. Take advantage of some of these trades that we've been talking about on a day in and day basis. Sarub, where's your stop on that? He says I'm short gold. Where's your stop on that trade? What target should be pulled back? What should be targeted on the pullback? So again, the major key support for gold would still be about 1240, 1240.68, this region right here. That's the high close from earlier in the, well, it's the high close for the year, barring today, obviously. And it's the 1618 extension of the advance off the lows. Keep in mind also the swing lows that you made back in October. Add to that slope, all converge right here. So this would be your first sort of key support zone. A break below this 1240 zone would suggest that you have a lot more of a spill to the downside, in my humble opinion. We can dump that. Mike, do you think that the FXCM Canadian accounts will be transferred? Ziad, I really can't give you any advice, man. I'm not involved with the FXCM changeover. I just know because I got the email, just as you guys did, from FXCM that Gain Capital was offering those assets. So Just reach out to them. They're well staffed and ready to deal with the situation. Should be a smooth transfer. I don't think you'll have any problems, guys. I used to work back with Gain Capital back in it must have been 2004, 2005. All right. Any questions on gold? Ziad says, sure. Thank you. Hey, more than welcome, man. More than welcome. Your stop's at 1253. Okay. Let me just ask you one thing, Ziad. I don't want to, or Sarub, I don't want to pick at you. 1253, is that an arbitrary number, or do you have a level there? Just giving yourself some breathing space? The level's 1250, he's saying? Okay. Yeah, that makes some sense. I do think, yeah, pretty much that tag of resistance right there. If you give yourself a dribble, yeah, 1250 might be a good area, because if that gives out, like I said, it's got some room. It's got some room to the upside if it does breach. Again, not my base case scenario. You know what? Just keep your eye on this. Divergence, ongoing divergence. See how long that holds. And that's the problem with divergence, is that this could hold for another, 3 or 4 days, a week before it turns over. But for me, it's definitely something we've been eyeing as this thing really tries to make it through these resistance levels. All right. That is gold. Number 10. Okay. Wow, I made great time. Let me know if you guys have any other questions. Silver looks like this, by the way. This question is for Conwall. Silver is also very interesting on this rally. Look, this is an objective break of the weekly opening range. That does shift the focus higher. Again, dollar weakness propagating this even further. 1833, 1839 being the next key area of resistance from a Fibonacci confluence consideration. Yeah, I mean, that's a pretty strong base off the 200-day moving average in a launch. But again, the momentum signature, none of the metals seem appealing to me, guys. I'm just not turned on by any of the metals right now. I do think, again, put a gun to my head, this probably pops into 1839, 1833 first. But even then, I still think you're at risk. Just because the breadth of the rally, these rounding tops, as we always talk about, being a little bit more of a conviction turn sometimes in price. But intraday, yeah. Intraday, yeah, the immediate focus is still higher. You just broke the weekly opening range. If it pulls back into 1809, the initial weekly opening range high here, look for some support. Resistance on the upside is 1835. Hey, you're more than welcome, Kamal. My pleasure. Okay, let's see, where are we? Anyone have any other questions on pairs, trade setups heading into next week or beyond? Again, I will try to get out as many updates as I can. Jamie will be on normal course, guys, and I'll keep you updated SB Squawk on what my schedule looks like. There's the basing in dollar CAD, by the way, 30.85, and looks like a nice initial reaction. You're about 20 minutes off the U.S. Open, guys, so the opening range for the next 30 minutes will be something you want to pay attention to. Remember, our broader bullish invalidation is still going to remain at 30.74, something I'd like to possibly try to fade on a last dribble here into the U.S. Open. Also, looking at the dollar-yen trade, that structural support, possible support, both areas of interest for fades. And, of course, sterling, well, Looks like we're going to try to make a pop into that 125.24 barrier. So remember the coil in the pound, guys. Broader picture still remains. You see that median line that we were talking about earlier in the week just has continued to hold. So if we hold this above this 25 handle into the U.S. Open, that's, look for a rally towards the monthly open. Look for a rally towards that next topside objective at 126.75. Copper looks like this, Conwall. Not really seeing the same type of strength that you're seeing in some other commodity plays today. This trade, actually, out of the commodity block that we've been talking about this week, I actually like this the best. And if you remember last week when we were probing through here, it was really hairy for me because, yeah, we were going through some key levels. Remember, we just tagged on this sliding parallel, actually caught that high, and it's been moving off ever since. I happen to think you look for a new low. For this to complete just a basic correction, you would need to see something like this and taking to 261. And that's the opening range low for the month. So the symmetry on this trade is just, I love it. And if you had, again, I'd have the bullish invalidation up against this week's high. It's been a very tight range. You're trying to press back below the monthly low, but look for a push below 269 to get this thing going. Again, divergence all up into the highs. Here's a trigger break that's been waiting. I think it's a decent one. Risk is for a near-term pullback here, below the weekly highs. Okay, and it may be too early for this, but just for argument's sake, bear with me one sec, guys. Just want to see what this looks like. Hmm. It's a 4 hour. Interesting. I don't want to stress this pitchfork just yet, but initial initial touches look good. Support, resistance, resistance, resistance. Even on here, you got a really nice pivot, resistance, resistance, support. Kind of puts the resistance right below the highs that we made in overnight trade, right around 274. Really tight range, but so is the weekly range, has been pretty tight. And you've set just a very objective weekly opening range as it is sitting at the support level. So I'd be saying look for a break between 274 on the upside and 270 on the downside for the go-ahead. Base case scenario, you do see a little bit more of a dribble before this thing continues higher. Does that help, Conwall, on copper? And also, an extension here might also yield some light on where we would be looking for some support on this. Sweet. So here. Key near-term support zone. There you go. Conwall, feel free to take a snapshot of that chart if you need it for future reference. Those are the levels I'd be looking at for copper. That's interesting, actually. Sparked my interest. Number 12. As far as nat gas is concerned, you're more than welcome. As far as nat gas is concerned, Here's what Natty looks like. Ooh, okay, turn just ahead of. Remember 253? We talked about this. This is the low day close from back here in November. We missed just pips. What was the low? 250. 254.1. We were looking for 252.8. So we just missed it, but the reversal now testing resistance. You're right back at former resistance. Remember, this con wall was a big, big level we talked about. As you were coming into this on the short side, I was completely skidded out. I was like, this is not something you want to mess with unless we see the break. Certainly the break fueled a very nice decline. Just missed the target, but here we are back at resistance. So I would say don't get excited on anything on the long side as long as you're sub 272 near term. That's the region you need to get through to even start to think, in my humble opinion, of playing the rebound. Also keep in mind that momentum is still an oversold territory. That's not, again, a time that you want to necessarily try to fight it. If we clear through 30 on a daily close basis and we clear through 272, that, in my mind, would be the conviction to play the recoil here or the rebound higher. As long as it stays sub 272, I don't really want to get too excited about it just yet. And again, there is some room here still, right, for another probe into the U.S. trade session. The index has a little bit more room, right, for a move lower, as we said earlier, before you start to run into anything, crazy critical. So maybe that's the play for nat gas as well. Does that make sense, Conwall? That's your barrier right there. Downside targets remain unchanged. He says, yes, sir. All right. That's number 13. Okay. Real quick, just on some of the other trades that we've been following earlier in the week as a recap, here's pound yen. We're still holding the weekly opening range, guys. The levels remain unchanged from the previous update. So if you go back to a couple updates, that pound yen level chart, all the levels remain the same. Again, you're basically struggling on a fight between the monthly open and the weekly open, which have continued to serve as support and resistance so far this week. Again, broader picture remains weighted to the upside. We've been looking for a drawdown to find more key critical support near the structure here to get back on the long. 143.30 is the level to beat to really get the next leg higher here in pound yen. Specifically, if this happens next week, guys, it would be really good from a timing standpoint. So do keep in mind that pound yen, those pound yen levels mapped out earlier in the week. Also, euro yen, just a quick look at that. The long wick we made yesterday was concerning for me, okay? But the fact that we still stayed below the median line and we turned lower, look for support today at 119.02, okay? It'd still be at 38.2. I know we sailed through it yesterday, but it's also the 50 line, which has been very nice pivot in price. So that confluence region would be where you'd need to see the break materialize if we're going to continue lower. Otherwise, this might be a nice launching point for another rebound or a near-term recovery in euro yen. So just a picture of what I'm looking at as far as really near-term heading into the U.S. session, at least for some of the updates that we've been following this week. Okay. If there are no other questions, I'm going to go ahead and wrap it up there. Guys, thank you so much for your attendance today. I will see. Thank you so much, Graham. I appreciate that. He says, thanks, Mike. I hope your move goes well. Same with you, Doug. Thanks for all the support, guys. Yeah, the timing has been, the timing of closing on this property has been long dragging out. So yeah, it's going to be a very interesting week for me. I'll try to keep you guys updated. Thanks for all the well wishes. Best of luck trading. Have a great weekend, guys, and we will talk to you next week. Cheers.